Heck
Thank you,
is
Madam Chair.
recognized for 5 minutes.
Mr. Chairman, I always ask the same question to the Chair of the Federal Reserve Board, which is, when does America get a raise? I may have to revise that slightly because obviously we're beginning to see some evidence of that, which I think is an indication of the full employment objective mandate that you have. So good job. In fact, I commend you for your hitting the patience button of late. But I'm looking at these payroll gains of, I think you indicated an average of north of 200,000 jobs added every month. And I don't think that yet looks like full employment, month in and month out. And as Minnesota Fed President Kashkari has noted, the share of income going to labor, the share of income going to labor isn't really reversing its long-term slide. So when the FOMC is being patient and watching the data, what are you looking for in the labor market? How much slack do we have left?
We look at a very broad range of indicators. With inflation, we can look at one indicator, and we think central banks control that. The labor market is different. So we look at the unemployment rate. We also look at labor force participation. We look at wages. We look at job openings. I could go on. They're 20 or 30.
And how much slack do we have left?
And so you never know precisely, and you're learning in real time. And so I think we've learned from the performance of labor force participation over the last few years, and particularly the last year, that there are more people out there who will come back into the labor force, and that creates more slack. So
more slack to come?
We hope so. So we don't really know. There is a long-run aging trend in our country, by which my generation is now retiring, and so you're going to have lower labor force participation compared to what you would have had. But the very strong labor market seems to be pulling people in and holding people in from leaving. So it's a very, very positive development. We hope it continues.
So once we get to full employment, the definition of which you will acknowledge has been a moving target on the part of the Fed, are you willing to let wage growth climb to 4%, either to begin to recover some of the decline that we've experienced or labor share of income, or alternatively, an idea that I don't think is discussed often enough, to see if tight labor markets themselves can improve or boost productivity? Are you willing to let wage growth hit 4%?
So we're really targeting price inflation, not wage inflation. And so wages should equal to it in the aggregate.
Okay.
Inflation plus productivity.
As a follow-up, I have a couple of charts. Do we have them? These are your two mandates, obviously, full employment and price stability. You referenced the price stability. My second slide focuses just on it. So could we go to the second slide or not? The second slide. I'm burning daylight. Evidently, we can't go to the second slide. This shows the record over the last 25 years with respect to the Fed's price stability target of 2%. I think what's important to note is that we've underperformed 85 months versus overheating 2 months. 213 months within 0.5% of target, and good on you for that as well. But clearly, the long-term record of the Fed has been to underperform. So there is a relationship between wage growth and price stability. And on the issue of price stability, the Fed has been underperforming way more, a multiple of I don't know how many, than overheating. And this speaks obviously to the issue of when are we going to get wage growth that begins to compensate for years and years of decline. I know you're engaged in a healthy exercise to review the tools and communications. Frankly, sir, what I would hope is that would be taken into account, frankly, some more transparent advancing of the historic record as a means of informing policy going forward, because I think this data speaks very clearly that we have a need to place a greater emphasis on wage growth and the factors that affect it. Thank you, Madam Chair.
If I can just say, you're absolutely right about the inflation data, and I think a number of us have commented on that recently, so I like your charts.
Thank you. The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Chairman Powell, welcome back to the committee, and I